Imagine the global economy as a giant chess game where every move by a major player sends ripples across the board. At the IMF World Bank spring meetings, one thing is clear. The U.S. reshoring strategy is forcing both rivals and allies to rethink their next moves. As the pieces shift, we're seeing surprising players emerge and the dominance of U.S. assets come under scrutiny. We're going to break that all down for you and more right now on UBS Trending. Hi, everybody, and welcome to UBS Trending. Thank you so much for joining us. I'm thrilled to be joined in the studio once again by my friend and colleague, Alejo Czerwonko, the CIO for Emerging Markets Americas. Alejo, good to have you back. I know you were just down traveling in D.C. at the IMF World Bank spring meeting, and there was a lot of information that came from that, and you, I think, walked away with a lot more information than you did when you walked in. But let's just level set, because maybe some people in our audience are not really familiar with the International Monetary Fund or IMF, what those meetings are about, why they're held, who's there. Just kind of give us the basics of it all.
Absolutely, Anthony. We're talking about the International Monetary Fund, a huge multilateral institution that gathers the presence of just about every country in the world. They meet twice a year in Washington, D.C., and they invite finance ministers, central bank presidents from the United States, Europe, Asia, Latin America. So it's a great bang for your buck. You show up for a few days and you get a download of information that is really valuable, almost impossible to mimic somehow else.
It's incredible because I'm sure it was timed this way on purpose, but you know, we're talking about the tariffs that are affecting every country around the globe, and as we know by now, percentage-wise, some more than others, and the impacts on some of the economies are greater than others. What did you hear about the tariffs when you talked to individuals that were there and other global representatives? Because we're only getting a one-sided view of it here on the U.S. side. What are they saying? How is it potentially impacting some of these countries?
Let me start by saying that just about everyone is in shock and trying to digest this regime change. Now, when it comes to a forward-looking statement of what's in store, views were all over the place. You had folks out there that said, I think deals with Japan, Korea, Europe, India are imminent, trade deals, that we might see deregulation coming out of the United States, that after that, tax cuts will follow, markets will boom. That's one set of participants.
Yeah.
On the other end, you had other more cautious people highlighting, look, 232 investigations on semiconductors, on pharmaceuticals, on materials are ongoing. We might see higher tariffs before tariffs eventually settle to lower levels. So look, the range of possible outcomes was super wide. One thing for sure, people came out thinking the genie's out of the bottle, the toothpaste is out of the tube.
Yeah.
In other words, we're going to see more fragmentation. We're going to see different spheres of influence. The U.S., with its sphere of influence, so applies to Europe, so applies to Asia. And so we're in a new geoeconomic world in which money, people, goods are not going to be able to flow as freely globally.
Did anybody talk about the overall global economy? Was there any talk of a recession? Because, you know, these words keep getting dropped every time we talk about the potential for tariffs. Some companies are saying recession is probable. Some are saying it's not inevitable, but likely. What were some of the things you heard?
Everybody's talking about the possibility that the U.S. falls into recession. Much will depend on tariffs. Will this be permanent? Will this be temporary? Will this be higher? Will this be lower? This is the single most watched for indicator to try to predict, is the economy going one way or another? People do agree that tariffs are, by and large, stagflationary. That is, they push activity lower and they push inflation higher. Now, the degree of that impact depends on whether we're talking about permanent, temporary, or just the size and magnitude.
There's still uncertainty around it then, right?
Lots.
I mean, that seems to be the word of 2025 is uncertainty. I'm sure that really played a very big part of these conversations that you were having, was this uncertainty around almost everything.
Without a doubt. Everybody is watching super closely the 90-day negotiation period. And as I said before, the 232 investigations on key items. We shouldn't forget that as we speak, chips, pharmaceuticals, and certain materials are exhibiting zero tariffs in the expectation that this might change in the future.
Yeah, and look, we can look at the markets for the last couple of weeks. A lot of volatility. We've had significant down days. We've had significant up days, but we've seen simultaneous sell-offs in equities in the U.S., the U.S. dollar, and treasuries, which comes into question about what we call U.S. exceptionalism. Does that?
Absolutely.
What were some of the comments that were made about that while you were talking to folks?
Absolutely. Everybody is questioning the degree of U.S. exceptionalism. As you described, the simultaneous sell-off in stocks, bonds, and the currency is not something that you'd expect of a developed market. It's something that is more commonly observed in the emerging markets context, right? So, look, the IMF estimates that foreigners are sitting on $22 trillion of U.S. assets. If at the margin these foreigners rebalance their portfolios a little bit away from U.S. assets into international assets, this can be a big deal. This is part of the reason why we think the dollar is likely to weaken in coming quarters. That is very different, Anthony, from a loss of global reserve currency status. We're not projecting that. We think that takes a long time, if ever, to materialize.
Okay. And is this, if you look at what came out of that meeting and the kind of comments that you're saying people were sharing with you, how does that bode for overall emerging markets, which is the area of the markets that you're covering? Does it bode well for EM if folks are maybe going to be investing less in the U.S.? Where else are they going to be putting their money? Is it in EM? Is it in international developed? Where do you see that happening?
Yeah, by and large, of course, if people are willing to shift capital into other parts of the world, that's of course positive for emerging markets. But investors do remain quite selective. There was an emphasis in geoeconomic middle powers or geopolitical swing states, those countries that are large enough, we've talked about this in prior editions of this show, large enough that they can try to craft their own path in between the US, Europe, and China. Think about India as an example. Think about maybe the UAE, Saudi Arabia, Brazil. These are countries that have tailwind behind their backs, and if they take advantage of the opportunity, they can do pretty well.
Yeah, it's a fascinating story, and also something else that you wrote a blog and talked about the comments coming up about the Fed's independence. Maybe there was less worry about that in the last few days than there was last week. Is that still the case?
That's the case. Most investors that joined the IMF meetings thought, all right, now Powell will be sitting where he is until the end of his term in 2026.
Right.
The independence is being respected. Not much concern, at least as we speak. Now, all of this constellation of views did translate into a consensus, which is gold as a potential beneficiary of fragmentation, threats to the independence of the central bank, moves away from US dollar assets, right? People did think that even after the appreciation in gold prices that we've seen so far this year, this has further room to run. As you know, Anthony, this is something at the Chief Investment Office we share.
Absolutely. Yeah, it's been a good call for CIO because it has been coming up quite a lot, the importance of gold in this crazy, uncertain, volatile environment. Alejo, thank you for bringing all this information back. It's always great to leave our shores, so to speak, to hear what others are saying, to kind of take a look back in to see how things are going. Great to have you, Alejo. Always a pleasure.
Anytime.
Great, Alejo Czerwonko from the Chief Investment Office. And for more information on everything that Alejo and I spoke about, plus all the other insights coming out of our CIO, you can visit our insights website at ubs.com/views. Plus, you can follow UBS on social media. We're on LinkedIn, Facebook, and Instagram. You can also give our studio a follow there at UBS Trending is our Instagram name on that particular channel. And as always, if you have questions about your portfolio, make sure you're continuing this conversation with your financial advisor. Until next time, I'm Anthony Pastore. We wish you a great rest of your day, and remember to keep your eyes on what's trending. See you soon, everybody.